How are you advising your clients to manage through this volatility?
Hey, Brian, it's great to be back with you. So how I'm talking to clients about all of this volatility that we're seeing is that, first of all, the traditional rule book does not change, right? So the basics, kind of getting back to the basics, having a plan, diversity, asset allocation. Asset allocation can really be attributed to a great deal of the percentage of the portfolio. So it's really not rocket science, and it's really not super fancy. Kind of just getting back to the basics is really what's important right now, and just kind of staying the course and really thinking about those strategic and tactical moves that we can make in a time like this.
To stay the course, you got to have a course. So what is the course of best option right now, Tiffany, when it comes to equity investing?
So we're thinking about a couple of things going forward. Again, first of all, don't panic and sell, right? Because we're really just coming off of this past year, where we didn't have a ton of volatility. And especially with so many new investors in the market, this is a little bit, this might be giving investors a little bit of whiplash, especially with all this talk about the Fed tapering and tightening and, of course, now trimming. So what we're doing is really staying the course, but looking for these opportunities in individual stocks, right? And so I think kind of going forward, number one, we like financials, and I've talked about the financials that I own in the show, JP Morgan, Goldman Sachs, and I also like the smaller kind of like investment banks that people really don't talk about as much. I think last time I was on the show, I may have spoken about Houlihan Lokey, but we also like information tech, right? So a company like Workday, we really like right now, and again, now is a great time to buy those names. I talk about tech a lot on the show. I do like these tech names. Of course, your staples like Apple and Amazon, but really looking for these glimmers of opportunities and really looking at companies with pricing power. I know I mentioned Lulu on Twitter, but then also looking for really doing your deep due diligence on these companies and looking for information that you can't see on a balance sheet. And by that, I'm really talking about data that can be captured in environmental, social, and governance, or ESG metrics.
And Lulu and Workday both meet those metrics, Tiffany, I'm assuming.
They do. They do.